Good morning, traders from Chicago. It's 8:01 a.m. Central Time. It's Wednesday, June 18th, 2014. Always and forever. Thanks for joining. Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown on the news that could influence the trade or has influenced the trade. The BOE minutes came out, 9-0 votes to keep rates unchanged. Also 9-0 votes for unchanged QE. The committee was surprised by the market's priced in low probability of a 2014 rate hike, which means that premature hike this year, premature being this year, could cause lost output, could shock the market. China's Premier Li will not resort to strong stimulus growth, moderated, no hard landing expected to maintain growth rate of 7.5% in China. In Iraq, militants hit the Baiji refinery with mortars and gunfire. A tank is said to be on fire over there. Refinery tank. Militants now control the refinery, apparently. I want to remind you that most of the oil production in Iraq is happening on the south side, and this attack by ISIS comes from the north and is sweeping down into Baghdad. Obama's ruled out immediate airstrikes against Sunni militants, but the U.S. military is confirming that they are conducting surveillance missions with unarmed drones per Iraqi government requests. U.S. MBA mortgage applications came in at negative 9.2% versus a positive 10.3% previous. That's a pretty big swing. 19.5% swing down on mortgage applications. Looks like the housing market's really got showing signs of weakness here, given the housing index and so on that came out recently. U.S. current account balance came in at negative 111.2 billion versus negative 97 billion expected, so slightly worse. Looking ahead at today, we have 12:45 Central. We have Bernanke speaking in Zurich, former Fed Chairman Bernanke, making the circuit, making money, I guess. But more importantly, at 1 o'clock Central, 2 Eastern, the FOMC rate decision comes out, expecting to hold at 0.25%, and the QE pace to remain at 35 billion. Also, and then at 1:30 we have Fed's Yellen's press conference. This is the key government release of the month, more so than anything else right now. So the market's likely to lull us into a very quiet trade after the morning adjustment, and then we'll just sit around and wait for this FOMC rate decision, and then based on what is said, which the market's not expecting surprises, so just be careful, since that's the general consensus, is that they expect the FOMC to just stay in line with what they've been doing. Many reports out there on various analyses on the FOMC, but there's really nothing to discuss there. It's fairly well known what the FOMC's position is. Let's look at yesterday's trading and answer our typical questions into the session of what has the market done, what is it trying to do, how good of a job, and what is it likely to do next? Where is the path of least resistance? So looking at the 15-minute, we had a triangle coming down from above, from the high of year, swooping down, that got broken on the upside yesterday. And the market has continued to put in a higher low and a higher high has moved the point of control outside of prior day's value, so the bulls are back in control, pushing back to the target yesterday, if you recall, was 36.50 on the upside. The market got to 35.75 on a week high, multiple highs here early on, and in the overnight session it looks like did not take that out at all. If my overnight data is correct, it's tight. It makes me think that it isn't correct, but I guess it is. So yesterday we had an open auction in range, 24 quarter 27.50 opening swing. The market tested immediately upwards, pushed through that 28.50 29 area I was looking for sellers to step in at. My primary hypothesis yesterday was for a test up on the open, immediately on the open, resistance, and then for it to fall back through, and then the target on any selling would be 1675, with 2250 being the first stop, the first likely stop. That didn't happen at all. It played out the second hypothesis, which is a test lower and then a push higher towards 36.50, as I'd mentioned. Key level above to test is 40 and a quarter. 40 and a quarter. Didn't quite get there. Another summer trade, boring day kind of trading, but the volume has been pretty decent. Yesterday we traded 967,000 contracts on the day session versus the norm of about 1.3 million, 1.2, 1.3 million. It's not too bad. But generally we have a large move up or down followed by an almost 100% retracement, and then the market has tended to just kind of sit sideways from about noon central, 11:30 noon central onwards, and possibly buy on the close. It didn't buy on the close yesterday. It was already near highs all afternoon. Nothing to report here. It was a normal variation day. The key things to take out of this is that we have again pushed the point of control upwards. My charts are reloading here just to make sure this overnight data is correct, but it's taking forever. So we moved the point of control higher above the prior day's value area, above the prior day's range. It's bullish. The stance of the ES is bullish. By contrast, the NASDAQ did not do the same. The NASDAQ holding its value area in line. The NASDAQ staying completely imbalanced for now, and it has a target of 92.25 above in Qs. I wanted to talk about crude oil for a minute, but again, my charts here, probably not a good idea to have. I've only asked for a couple of days of data, but they're blanking out. Without charts, there's not much for me to talk about, but hopefully they'll pop back in here as we continue to talk about this. So for today, looking at the overnight session, not much happening there. As I've already said, it's pretty tight. Today it's all about sitting around, being patient, and waiting for this FOMC release to come along. This is the night session here. This is the overnight session here. A very tight trade against the high volume node from yesterday. Let's make this a 24-hour. Against the high of yesterday, market did not have anything to price in on the overnight. Multiple tops at 35.50. Again, multiple tops at 35.75 in the day session. So this is a very, very weak high. But I can't say much for the low either. I mean, this is the tightest overnight session I've seen in a long time. The market's really not willing to price anything in at the moment. completely dead. So there's nothing to glean from the overnight session. 93,000 contracts traded. 93,000. Must be a holiday somewhere. 93,000 contracts. That's very, 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 very low. It's less than 50%. It's about 40% of norm. Okay, very odd. But still stuck against the high volume node up top. So the primary expectation for today is continuation higher, not seeing any reason why this would not be the case. Let's take a quick look at crude oil just to kind of change gears just for a second. Crude oil pit session just opened. We've had this balance here. The market's been in a sideways pattern and has been trending sideways in a balanced zone, and then on initial consideration of this ISIS situation in Iraq and so on, we had a gap up, and then we balanced for a few days as the market digested that information, waiting for confirmation. We balanced with 104.39 being the key balance price. The point of control, which is where we closed on Wednesday last week on the 11th. And then Thursday we came in and gapped up, left a gap behind, and finished the day strong. The next day opened where the prior day closed. On Friday we opened right where Thursday closed, and then continued higher. Prices pushed to 107.22 on the August 2014 contract, August being the Q contract. And then here it is starting to fold over itself. And then yesterday what I talked about is the stronger possibility of a retest lower, with the ultimate target being 105.06, the top of this balance zone. The initial stop, the initial testing point here would be 106 even, the lower high volume node here. So what you have is a double distribution profile with a lot of the volume occurring on the upper end, and the market has broken through the LVN, and this is important, broken through the LVN at 106.46, and is moving towards 106 even, which is the next expected test area. If it bounces off of 106, then the expectation is a retest of 106.46. If it gets through 106.46, then the expectation is for 106.90 and new highs. Okay, I might have said that too fast, but that's really how I'm looking at oil. I've received just a lot of emails of, say, at least a dozen requests over the last few days to just take a quick look at oil. But that's how it's shaping up volume-wise. You can see that there's a clear double distribution. Your line in the sand is 106.46. 106.46. Retested on the close yesterday. That was your closing swing high before the market held the close at 106.26. And is opening and is testing immediately, starting to shoot for yesterday's low, and has taken it out by a tick so far. The expectation is for it to continue lower towards this 106 even level. That's the primary high volume node here, and the naked point of control that's been left behind. Let's highlight this point of control. Anyway, we'll do that later. That's how crude oil looks. So with that, I think the primary hypothesis for today is, since we're probably going to open right where we close, is we're looking for chop on the open as tight as it was yesterday. If you recall, yesterday we had this kind of sideways chop for about 3 points for a while, and I'd commented that there's a fair amount of volume happening in this chop. There was volume was in line with the 20-day median, and it was coiling. So watch out for the break. It did break for 4-point rotation. Never could retest the opening swing to give us a chance to get on the train here. but it broke higher right into the prior point of control, 29.50, did not pull back to the OS high, and then continued with another rotation from 28 to 33.75 for 5.75 points. It one ticked the high for failed auction. This is a perfect example of a failed auction, one tick failed auction. Went above 33.50, which is the prior day's high, to 33.75, and then boom, comes all the way back to the open. Comes all the way back to the open for a double bounce, and then continues higher. Pretty sweet setup here. This looked like a weak test of the open. This looked like a pullback to the mid for a push through the OS. The expectation is if the market moves away from the OS and falls back in it, then the expectation is for it to test the other side, and it did not. So this has been the case with the mid-short trade lately. This is a setup for me here. Test the open, pull back to the mid, pretty decent rotation, 3 points, which is about the size of a harmonic rotation. For all intents and purposes, hang on, I've got a risk issue here. For all intents and purposes, this is a really good, this is a really decent setup, except that, as I'd commented on Twitter yesterday, sell signals or sell setups on the mid lately have been pretty harsh. This one was pretty good. It rotated up 3 points into the mid VWAP into yesterday's close and point of control, and then it paid 3 points, so at least gave us a scale out before it failed to take out the open. The expectation was 24.25, 22.50s next, and we would start playing out hypothesis number one, 22.50, and then in my dreams, 16.75 down here. Did not happen. Held the open and started to move back up, and then pushed the point of control up into outside of the prior day's. So today, looking for chop, pretty tight and wound up chop. There are no numbers early today, so the market doesn't have anything to wait for, but I'm expecting that there will be very little interest in the open, and then I suspect that there will be a test down before it continues higher to 36, takes out this week high on the overnight and yesterday's session high, to continue on its way to 36.50. 37.75 is the next minor CLVN, with 40 being the key target above. Okay. I won't go into the second hypothesis. The second hypothesis is simple. It's the opposite. Chop, 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 test higher, maybe one tick the overnight high and yesterday's high, fall back in, and then start to move down, but I don't expect it to drop hard. I expect it to move down and chop around until the FOMC. The FOMC, when it comes out today at 1, essentially what you have to do is divide the day into 2 sessions. Look at what's happened today as if it's yesterday before the FOMC, and then trade the FOMC. If you're going to trade the FOMC, which carries extra risk, trade the FOMC as if it's a new session, because when that information comes in, essentially you have a new driver, new valuations, new driver going forward into the end of the session. Generally, people like to kind of consider it, and it's natural to consider it a continuation of the session, but it really, in my experience, it's better to look at it as its own thing. It creates its own open and its own trade through the Yellen remarks. So that's what I'm suggesting. So that's that. Again, headline risk is Iraq and the prices of oil and gold. That could change a lot of things. So already here in the U.S., oil, the events in Iraq are costing us 8 cents per gallon at the pump. So all of that will trickle through the economy and have an influence eventually. The closing remark for today, I'll keep it short. I rambled a little bit too long today, but analysis paralysis. I see this a lot. Analysis paralysis. This is the typical thing that a trader who's trying to do this professionally, this is a typical thing that we all have to wrangle with at some point, where uh, for any given setup or for any given trade, you have 15 reasons to get long, but you also have 15 reasons to get short. And then what you end up doing is you end up either not acting early enough, acting too early, or not acting at all, which causes this eventual fear of missing out, which is a tough habit to get rid of, tough emotional habit to get rid of, and so forth. And the key thing you have to do as a trader is to do your hypotheses and do your homework when you are in a completely calm and logical and sensible state of mind. So to come into trading to think that, hey, I'm going to see what happens today and then I'm going to react, that's great, but you really have to be very emotionally aware and very clear about how you're going to execute, and then have to have a very clear risk control plan, because you may be completely out of alignment with the market. It's really important to define these things before the fact. Okay, you're going to define that if the market does X, I'm going to look to do Y. It doesn't mean that you should know exactly what price you should get short or long in. That's not what I'm advocating. You would not be listening to me if you're an algo or machine trader. It sets the action into motion, so that you're not sitting there going, gosh, I want to get short here, but I see that it's doing this, and then there's a moving average that's crossed over, and then that's way too much thinking. There isn't a professional endeavor in which we do that. We don't sit there and decide on the spot unless we're an emergency response. Even emergency responders have specific things that they look for, and based on those things, they have a reaction. Even if it's wrong, it may be the wrong thing to do, but they still act on their training. They're doing their thinking ahead of time. When it comes time to execute, respect your plan and just execute. It's not time to do your analysis when the market's open and trading. Okay, if you want to stop and do your analysis, that's fine, but you're going to have to stop, replay the session, or look at the session objectively, detach yourself from it. Don't think about your P&L. But once you put a trade on and you have a P&L for the day, a lot of things get blurred until you move through the stages of consciousness or the stages of learning to the point where the effect of your P&L or your past performance is not influencing what you're going to do next. It's really important to internalize what I'm talking about here and understand that a lot of the problem that a lot of people will run into is just that, is having this very wishy-washy kind of plan, not defining the areas they're going to trade in, and then trying to do that on the spot. And there's just not enough confidence and not enough emotional awareness to be able to do that. Good luck today, and I'll catch you tomorrow. FOMC again, 1 o'clock Central. Pay attention to that. Take care.